So home prices are at an all-time high right now, despite going through what most would consider kind of the weirdest event ever in probably your lifetime or my lifetime. And obviously a big reason for that is the Fed is keeping the interest rates low, and they've come out multiple times and they've basically said that until everything kind of clears up, that they're just gonna continue to force and to keep the interest rates low. So just right there alone will tell you why house prices are at an all-time high. I mean, when you look back in time, anytime interest rates are low, prices are high, and anytime interest rates are high, prices are low. So what we all want to know is what is about to happen with housing prices. I mean, are we in a bubble? Are we in a housing bubble? Is it about to pop, right? What is about to happen? Are we going to see everything just tank like we saw in 2008 with the Great Recession? You know, unemployment is still at, I mean, I'm not gonna say an all-time high because it isn't, but unemployment is at 10 million people, okay? There's a lot going on in our economy. So look, we're gonna break it all down for you in the video, because what I can tell you for sure is that nobody has a crystal ball. Actually, hold on a second. I got a crystal ball, okay? So here's what we're gonna do. We're gonna figure out what prices are about to do, okay? And we're gonna figure out whether or not the market's about to crash. We're just going to, just bear with me here, okay? Now make sure that you just do me a quick favor and that you just smash the like button for the YouTube algorithm. Because we're about to find out what's gonna happen in the housing market in 2021 going into 2022, okay? Just bear with me. I'm not sure exactly how to do this. This is my first time. All right, I got it. Did you smash the like button? Let's go ahead and jump right into the video. All joking aside, nobody has a crystal ball, okay? Not me. I mean, I do have a crystal ball, but it doesn't actually give me all the answers, okay? It just helps me a little bit. Now I'm just messing around. So let's just jump into the video. So we all know that supply and demand are two major things that play a massive role in what housing prices are doing. So let's just take a look at it. And I know you probably already know by now. This is probably not the first video that you've watched on the market crash. So I'm gonna keep it real simple, and I'm gonna talk about things that you don't already know. Supply's at an all-time low, and we know that, right? And that's caused by a number of different things. It's caused by low interest rates, obviously, and all of the new home buyers that are going and buying houses. It's caused by this massive wave of millennials that are going to buy new houses. There's a ton of factors that play into supply and demand, and even more factors that play into supply and demand as it pertains to what is happening right now, which again, supply is at an all-time low. I mean, I'm a real estate agent and a real estate investor in Arizona, and what I can tell you is that literally as of like today, there's like 5,000 houses active on the market, okay? Now, a healthy market is like 30,000, okay? So 5,000 is like an incredibly low supply. Another big reason supply is at an all-time low is sellers didn't want to sell. It's like, why would I want to sell my house? So I can go and deal with the exact same problem somewhere else? I mean, sellers didn't want to sell. All of the buyers want to buy. They want to take advantage of the low interest rates, right? And there are so many variables. They just extended all of the moratoriums, okay? They extended the eviction moratorium and the foreclosure moratorium. And if you're not familiar, the initial moratoriums were in the CARES Act back right after, you know, the pandemic was kind of happening. And basically it was to prevent people from getting foreclosed on, to prevent people from getting evicted, but then they just kept extending them, right? And now, you know, we're looking at the new administration, which is proposing more stimulus, okay, which we're gonna talk about next week. So if you haven't already, definitely subscribe to my channel. But you know, that plays another role into supply being at an all-time low due to the fact that people aren't even being forced to sell. Okay, so not only do people not want to sell, but they're not having to sell. Okay, so there's not like some big wave of foreclosures coming because they're doing a lot of loan modifications right now, and they're just tacking on all of the missed payments to the end of the loan. So it isn't like the money's not due at all, but it isn't due up front, right? So it's due down the road, okay? So, you know, that was a big argument that a lot of people you see on YouTube are talking about, like, hey, you know, there's gonna be this big wave of foreclosures. Well, to be honest with you, there might not be. And it is a great time to be a seller. I mean, depending on your situation, right? If you're a seller that bought in 2010, 2011, 2012, then you've got a ton of equity in your property. and now's a great time to sell. Now, the problem is, where are you gonna go, right? Now, if you're leaving California, if you're leaving New York City, big cities like that, then sure. Like, if you're leaving California, you're probably going to Las Vegas, you're probably going to Arizona, you're probably going to Dallas or Houston or San Antonio or Austin. And if you're going from New York, you're migrating to Florida, to Fort Lauderdale, to Tampa, Jacksonville, Miami. But if you're anywhere else in the country, like, where are you going to go, right? Because you're gonna run in to the exact same problem, and although you sold your property and you made a bunch of money, you have a bunch of equity, now you're potentially buying in the height of the market elsewhere, which again, it isn't the end of the world, right? I've made a lot of videos talking about that. You're gonna take advantage of the low interest rates, and assuming you're a long-time buyer and you're not gonna sell within 1 to 3 years, then you're probably going to be just fine. But again, it really does just to bend. And on top of all of that, the new administration is now proposing a $15,000 tax credit to first-time home buyers. So they're now incentivizing first-time home buyers to go buy a home, okay? Not only do we have a huge wave of millennials, one of the biggest generations ever, I'm one of them, that are all at the perfect age to buy a home, but you also now have the Biden administration, the new administration, proposing, a tax credit to first-time home buyers, and you've got repeat home buyers, people that have owned, 1, 2, 3, or 4 homes in the past, that are refinancing or they're selling, they're cashing out on their equity, and they're going to buy another home to take advantage of the low interest rate. So you've got a ton of demand in the market and you don't have a lot of supply, okay? So that is obviously causing housing prices to literally skyrocket. I mean, in March, we took like a little bit of a dip. We took a massive V-shaped recovery, and not only that, to top it all off, we've got the fact that the Fed is literally just printing money. Well, what happens when the Fed prints money? Interest rates and inflation, right? So you look at inflation, for example, okay? And inflation is like going through the roof because the more money you print, the less that dollar is worth, right? Well, what happens? People take their dollars and they say, well, cash is trash, right? It doesn't do me any good because I'm losing money on it in my savings account. So I got to go buy assets. Well, what are you going to buy with assets? You're going to buy real estate. You're going to buy Bitcoin. You're going to buy Tesla stock. And of course, you're going to invest into smashing the like button for the YouTube algorithm. One of their big goals is to decrease essentially the down payment liability that first-time home buyers have. So basically to create more down payment assistance for first-time homebuyers, for millennials, stuff like that, right? And we've seen that for many years with the FHA loans, and I've talked on my channel before about like house hacking and stuff like that, where you can get an FHA loan, typically 3.5% down, which is not a lot of money typically, right? But they're trying to increase that even more, or decrease it, depending on how you look at it, of course, to be, basically to get home buyers into a property with very minimal amounts of money down. Now, arguably, that could potentially not be a good thing, okay? Now, arguably, that could be a great thing. So I would love to know what you think of that particular proposal. Definitely let me know down in the comments section below. I would greatly appreciate it, but I would love to have a conversation with you about that. But there's so many variables that are playing in to the market, right? And you're seeing the stock market at all-time highs, Bitcoin, all-time highs, Dogecoin at all-time highs, okay? Elon Musk is like all about the Doge, okay? Who let the dogs out? The Doge is out, okay? So you're seeing all of this kind of simultaneously, go together. Now, what I will say is this, okay? We're seeing the 10-year treasury yields at, they're going up, okay? Now, the government, they're coming in, they're buying a bunch of the treasury yields. They're like, at this point, they're doing anything they possibly can to keep everything intact, to basically prevent the economy from having a total meltdown, okay? Which is probably not a horrible idea. Some would argue that it is a horrible idea because you've got to let the natural evolution of the market take its course. But again, these are all things that every single day are being argued by people, right? People are debating it, they're arguing it, and they're disagreeing about it. And that's great, right? You know, we live in America so that we can have healthy debates, okay? So that is what it is. It is a healthy debate. Now, if the government were to remove themselves from the picture and they were to stop keeping interest rates down, they were to stop buying up the 10-year treasury yields, and they were to stop essentially keeping their thumb on the entire thing, what would happen? And that is what I personally think, you know, in my opinion, based on the title, you obviously clicked the video. If you're still here, I really appreciate you. But in my humble opinion, okay, and it is just that, it's just an opinion, okay? I believe that if the government were to remove themselves from the equation, we would have a market correction. Now, I don't know what that would look like, okay? I don't know if it would be 10%, 20%, 30%, 40%, I don't know. Nobody knows. Again, that's why, okay, bear with me, I bought my handy dandy crystal ball, okay? Because I go to bed at night and I try to get information, because I'm just like you. I'm like, well, when's a good time to buy? When's a good time to sell? You know, can I go buy more rental properties right now? Should I fix and flip more properties right now, right? And so, you know, I would suggest that you get a crystal ball on Amazon. Don't get this one. I'm gonna leave a horrible review because I haven't gotten any insight yet on what the market's gonna do, okay? But I'm gonna continue to try. So look, in a nutshell, there's no bad time. I'm gonna continue to say this over and over and over again. The market at some point is going to correct. How much? Nobody knows, okay? When exactly? Nobody knows. But I would assume that it'll be between now and maybe 2023, if I had to just take a stab in the dark, okay? Because historically speaking, the market is gonna go up and down and up and down and up and down, right? And we've been on a bull run, basically, you know, just linear, exponential, however you wanna look at it, upwards. We've been on an upwards trend for 10 to 12 years now, okay? Which is historically about the extent of it. I mean, we're due for a pullback. We're due for a correction. It would probably be healthy to some degree to have a pullback, to have a correction, okay? So it's not a matter of if, it is a matter of when and how much, okay? So you wanna position yourself on the right side of that equation. Now, I've made several videos. I'll see if I can throw a video right here where I talked about, you know, basically how to position yourself on the right side of the equation. So definitely go check that out. It's talking about not only how to survive a market crash, but how to thrive during a market crash, okay? Check that out and let me know in the comment section down below what you think. Again, in my opinion, if you're buying and you're holding for the long term, you can't go wrong. Take advantage of the low interest rates. Again, consult with whoever you gotta consult with. This is all obviously for educational purposes only, okay? But that's just kind of my opinion. You know, if you're buying for the short term, now is probably not a good time. If you're buying for the long term, it's probably a great time to buy. Guys, thank you so much for watching. That is my opinion. If you liked the video and you're still here, do me a huge favor. Smash the like button for the YouTube algorithm. Subscribe if you haven't already. I'm typically talking about business, finance, and real estate, and I look forward to seeing you in the next one.